The US Senate just passed the Inflation Reduction Act, containing a provision to tax corporations on stock buybacks. And this is how you'll be impacted as an investor. To make the current bear market even worse, stock prices are expected to decline with this new measure. Effective January 1st, 2023, corporations that buy back their own shares will be subject to an additional excise tax of 1% of the total value of shares bought back. This could be fairly significant in some cases. Taking Apple, for example, earlier this year, they added $90 billion to their stock repurchase program, and had the tax been in effect, the company would have owed an additional $900 million to the IRS. In fact, the Joint Committee on Taxation estimates that over $73 billion will be collected from the tax alone over the next 10 years. With more taxes paid to the US government, there will be less money available to shareholders, therefore decreasing stock prices. One way to completely bypass this new tax is for companies to issue a dividend instead of buying back stocks, as the two methods are often viewed as close substitutes to return value to shareholders. Although we cannot be certain, given how savvy companies are, there is a high possibility that companies would take this dividend trade-off and increase yields on a go-forward basis to mitigate the tax. And this is overall a bad thing for you as an investor, as you'd end up paying the higher dividend tax rather than the lower capital gains tax. You should be looking out for these three items. Number 1, the Inflation Reduction Act is not quite law yet, as we're awaiting for the House to pass it and for the President to sign the bill. But we're most likely going to see this tax passed by the House, as they've already passed a similar provision as part of the Build Back Better bill last year. Number 2, with a few months before the anticipated effective date, we will likely see many companies rush to complete their stock buybacks by the end of the year to avoid the tax. And finally, number 3, one of the concerns with the introduction of this new tax is that once it starts, it can easily be raised to 2% or more. But this is a question for another video. Thanks for sticking around until the end. And please drop a like to help increase awareness on this new tax. I'll see you in the next one.